Kalimera, Anthropos, welcome everybody to Economic, all about economics and finance. A quick update in less than 180 seconds. Thanks to all new subscribers. Subscribe to the channel. What do we have this week of interesting is that on Tuesday, the Royal Bank of Australia, Central Bank of Australia, they hiked interest rate by 0.25%, by quarter of percentage point. And we see here that at its meeting today, the board decided to increase the cash rate target by 25 basis points to 3.85%. While inflation has fallen substantially since its peak in 2022, it picked up materially in the second half of 2025. The board has been closely monitoring the economy and judges that some of the increase in inflation reflect greater capacity pressure. As a result, the board considers that inflation is likely to remain above target for some time. So that's very interesting. I mean, it's fascinating because if we see here very quickly that in December 2025, Australia inflation rate year on year, it has been recorded at 3.8%. And the cash rate, the bank rate, was 3.6%. So there was eventually a runaway inflation problem because October was 3.8, then 3.4, then 3.8. So there is some volatility in the inflation measures, this on the surface. And so the Bank of Australia, it had to walk back its cut because they cut interest rate in August. They kept it at 3.6. And then they decided at this meeting in February, quite a few months later, to hike by 25 basis points. On the contrary, if we see the data today, Wednesday, we can see here how the inflation macro data and also the producer price index data in the Eurozone, they are turning negative. So that's really interesting. It shows how economics, macroeconomics, is truly it's fascinating because two different places they can have they can have, for example, in this case, inflation going in two different ways. So it explains how the whole economic construct it works in a different manner. Now the ECB was arguing about an interest rate hike, but I see the probability of an interest rate cut. I don't know what it's gonna be, but negative producer price index, they could be hinting at a slowdown in production, so slowdown in GDP. We will see.